Well, welcome traders. Good morning, afternoon, evening, whatever it is, depending on where you're calling in from. Looks like we got folks still logging in, and welcome, glad you're here. And got some folks typing in their greetings. Hey there, Brent. Welcome, Mitch, Miner. And Brent's got a symbol he wants to look at. And we'll do that later in the session here. Bob calling in from San Diego. Anybody else, make sure you can locate that chat feature on the Zoom webinar platform. Definitely want to be able to answer any questions that you have and have you make any comments as we go along, make it interactive. And we're pretty laid back here. There's a bunch of traders watching the market and waiting for this big announcement, see what the result's going to be. Hey, Brian, glad you're here. Welcome. All right, Tony calling in from Chicago. Yeah, locate that chat window and then just type in where you're calling from. That's always fun. But glad you're here, Tony. And again, looks like more folks are still logging in. Brian's in LA. Wayne from New Zealand. And no, not trading Forex. We're focused on equities in my trading room here. We're going to watch futures and the reaction, but not trading FX. Helen's calling in from Red Lodge, Suffolk, UK. Well, interesting things happening in the UK right now, eh? Alicia's calling in from Dallas. Brent from Carlsbad. Manohar from the UK. Yeah, a couple folks from the UK. And then gentleman from New Zealand. That's awesome. All right. And Gent's calling in from Virginia Beach. Good afternoon and welcome. Glad you could make it. All right. Well, let's kick off here. Helen says you're Boris and they're UK's Boris and US Donald twins. I don't know. Boy, there's plenty to comment on in the trading room. I've made it a point to not, we look at political developments and decisions as they affect the market, but we refrain from political commentary because it could just be a big distraction and divisive. So political opinions, we kind of put that on the shelf. There's plenty of other forums for that. And Robert's at the library in Aztec, New Mexico. Well, I hope you got headphones on. Don't want to disturb anybody. But glad you're here, Robert. All right, before we get started, just a quick kind of disclaimer reminder. I'm a trader. I'm not a financial advisor, and I'm not giving financial advice. I'm going to be sharing the setups I'm looking for in the market and my commentary as the market reaction to the Fed decision plays out. I'll offer some analysis. I'll share a couple of trades that I like right now. I'll offer to analyze anything you're looking at. Those are my opinions. Whether anybody acts on that or not is strictly the decision of each individual. Only you know what's appropriate for you. So I share what I'm doing. Each person makes their own decision. I'm not giving financial advice. Everything in here is for education, information purposes. And I think that's fair. Right? We want to get that up front. So if you don't know me, if you're new here in the trading room, you haven't been part of my regular trading room or other things. I'm Dean. I'm the founder of followmetrades.com. I run a stock pick advisory service, a trading room, and some education mentoring services. I started trading over 25 years ago. Really started when I was working. I went to work for Intel Corporation. They gave us stock options and incentive stock. And I joined in 93, and man, it went up, split and doubled like clockwork for several years. And I began to see the potential. It's like, wow, I'm making some good money here. While I was at the University of Washington, I got an MBA, and for a long time I was a fundamental trader, analyzing earnings statements and company fundamentals and all this stuff. And I just found that to be a pretty frustrating thing because it's really you're trying to figure out what should happen, and ultimately the reality is what does happen. And there's quite a bit of market sentiment that goes into the reaction to company information. I stepped back for a while, 2007. I was lucky. I got out right before the big crash. I was sitting in cash when that happened, so that was really fortunate. That was no skill. That was just luck. But I couldn't stay out. I got back in as the recovery began. And I didn't really have a trading plan. any kind of structure. And yeah, I got, the market was going up. I got into things like, Bank of America and stuff like that, and had great winning trades, but I was still stressed out because I didn't have a plan. I started getting interested in technical trading about 2010, made a lot of mistakes, went down a lot of wrong paths, and finally settled about 2012, so 7 years ago, on my current trading system. And it's done well since then, consistently year in, year out, booking some pretty good profits. Yeah, you have times that are better, times that are worse. The market lately has been kind of difficult, and so it's one of those periods you kind of have to endure. But over the years, my system's producing consistent profits. We just have to sit through difficult periods sometimes. 2015, I launched my service, Follow Me Trade, so it's been 4 years now. And it really I was connecting with other traders, and we were sharing ideas, and people started saying, "Hey, it looks like your system's working. Why don't you let us know when you're going to take a trade, and tell us more about your system." And it evolved into the company and the service that I have now, Follow Me Trades. And it's been fun. Best job I ever had. I'm just enjoying it, and it's really good to I really enjoy analyzing charts, looking at the markets, trading, and talking and interacting with other traders. So it's awesome. So here's what we're going to do in this session. I do have I don't day trade much. I used to do it more. It takes a lot of time and energy, and I prefer a little more relaxed, longer time frames, primarily trade daily charts. But once in a while I'll trade intraday, and I've got a what I call my trade the news setup. So when there's a big announcement like the one coming up here in a few minutes, there's a setup I look for, and I'll share that with you. And if we do get any intraday trade setups, I'll point it out. And if there's a trade there, we'll demonstrate it. We can discuss trade setups on larger time frames. I'll identify a few trades that I like right now that I'm about ready to take. You'll leave with some trading ideas, I think. And at the end, I'll analyze any symbols you're interested in. I can analyze Forex, futures, stocks. I trade stocks and ETFs with options. That's my thing. That's where I'm at. But stick around toward the end, and I'll be happy to analyze anything you're interested in. Okay, so current market situation. The S&P 500. If we look, intraday. So I'll show the S&P 500 futures chart. I don't trade futures, but I watch it, and I'm watching intraday. And you can see this today, which has been channeling. The whole market is just going sideways, chopping a little bit, waiting for this big Fed decision. So I'm pretty sure we can say that about an hour from now it will no longer be in this channel. But S&P 500, of course, over the last few weeks, put in some all-time record highs. Let me pull up a daily chart of the S&P. SPY is a good chart to look at that on. So let's look at the SPY. So you can see even late last week, all-time record intraday and closing highs. First couple of days of this week, it is pulling back just a little bit and channeling again. Everybody's waiting for the Fed announcement. We'll get rid of some of these lines here. So that's where we're at, all-time highs, but channeling and chopping just a bit right now. So while we're waiting, we got about 20 minutes before the announcement comes out. I thought it'd be fun to do a poll. So, and for anybody who's just logging in, hey, welcome. Glad to have you here. And so let me start with this poll. And so the question is, what do you think the Fed's going to announce today? And your choices are 25, 0.25 point rate cut, a bigger rate cut, a rate increase, no change to interest rates, or I just have no idea there. And so it looks like the answers are coming in. When they slow down, I'll share the results, and that'll be fun. So go ahead and place your bet. Go ahead and click on your answer there. And thanks for playing along. Looks like most people are getting their votes in. We've got so far 84 people in the room logged in, and just over half of them have voted. So I'll give it a few more minutes, and then we'll show the results. And there is a clear winner. Looks like the votes are still coming in, so I'll give it a few more minutes. So you should see this poll on your screen, and just go ahead and click your answer, what you think is going to happen. See a couple folks raise your hands. That doesn't really, I know there's a raise your hand feature in Zoom, doesn't do much. You can type any questions or comments into the chat box. That's more helpful. And of course, participate in the current poll. All right, looks like the answers are slowing down. We got about 60 people who have answered, and I'm going to go ahead and end the polling, and I'll share the results. All right, so you should see that. And so there's a clear winner that 70% of the people who gave an opinion said that they think there will be a quarter point rate cut today. 25% say no change, and 5% say have no idea, which is a legitimate thing to say. I have no idea. And then, in my trading, I don't trade based on what I think, like the Fed's going to do, or what I think the market reaction is going to be. I wait for the realities and then try and trade, what's actually going on. That has been more successful, but it's, we all have an opinion. I think we'll get the quarter point rate cut at this meeting. Okay, so I'm going to stop sharing that result. So that was fun. Now the next more interesting question is, what do you think the market's going to do? So if you think the Fed's going to do a quarter point rate cut, or whatever you think the Fed's going to do, how do you think the market's going to react to the Fed announcement? So go up, go down, go sideways, or I have no idea. Here we go. The votes are coming in. They're coming in fast and furious. This one's not as clear. There's a little more distribution in the answers here. Roger says it depends on the signaling of future actions. And that'll come in the press release, the press conference afterwards. So there'll be an announcement about, the decision, and then there'll be a press conference where, everybody's going to dissect every single word that Mr. Powell says. And then I think in a week or two, they'll announce the actual minutes, and everybody's going to parse those out as well. So, but there will be a reaction to the initial release. Of that, I am pretty sure. Okay, we even got a bigger response this time. More people have logged in. We got 93 people logged in right now to the room. Welcome, glad you're here. If you missed the introduction, I'm Dean Jenkins, founder of FollowMeTrades.com, and we got about 15 minutes till 18 minutes until the announcement comes. Okay, over 2/3 of the people in the room have voted. Looks like votes are still trickling in, so I'll give it a minute. We just hit 69 votes. 70, and it's kind of trickling off, 71. Wasfi says no sound, it's not clear at all. So I think nobody else has mentioned that the audio is not good. Is the audio good for everybody? Maybe a few people type in yes, or if there's a problem with the audio. Yeah, most people are saying it's good. Yeah, you might check your connection or re-log in there if you're having a problem. 5 by 5 with everybody else, no problem. Okay. No problem from the UK even, so I think the connection here is good. All right, we got 75 people who have responded out of 100 in the room, so let's go ahead and end that and then share the results. All right, so we got 32% say the market's going to go up, 26% say it's going to go down, 24% say sideways, and 18% have no idea. So that's pretty well distributed, but the biggest expectation there is for the market to go up, not too far behind where people say it's going to go down. Okay. I'll go ahead and close down the polling. That was always fun to do. So let me show my Trade the News setup that I've used over the years. It works pretty good. So This is for intraday trading, and it's when, you know, we have a expectation of a big move in the market, and then it happens. You know, what's the setup? You know, what would get me to, you know, take an intraday trade? And, you know, I don't want to trade based on, you know, just an impulsive move and then try and jump in. But what I'm looking for is a big initial move. So it would be this move right here, right after the news, right? And we're probably going to see some kind of move. Now, this is a bearish move down. This is a short setup. So we get a big impulsive move, and then we get a retracement in the opposite direction. And I look for it to go into a Fibonacci retracement zone between 38.2 and 61.8. And I just measure the initial move and then look for a Fibonacci retracement. And then we start looking for a trade setup, right? And I look for after the retracement into a Fibonacci zone, a low, a lower high, and a new low. And so as we put in a new low or take out that original move, that becomes the entry price, right? And there's typically quite a follow through on that initial move. So that's the kind of thing we're going to be looking for and see if it appears. Sometimes it does. Sometimes you get a big dramatic move and there's no retracement, and you know, you kind of miss it. But you know, I think when you're trading, you got to have criteria, you got to have setups you look for, and you got to have rules you follow, and you know that you'll do better in trading than just, you know, kind of blindly jumping into a one direction move. So this has been pretty good, you know. An impulsive move, a correction to a Fibonacci zone, and then evidence that there's going to be continuation and follow through on that initial move. So this is what it looks like long. Here's the initial move, up. Then there's a retracement into a Fibonacci zone, 38.2 to 61.8, and then evidence of a high, higher low, you know, taking out that high and then looking for follow through into a bigger move. And so that's a pretty good long setup. So we'll get back to that. So let's go ahead and take a look at what the S&P 500, the E-mini, is doing right now. And it's tightening into a pretty narrow channel right now. And no surprise, you know, given that we're 13 minutes away from the announcement, right? I would expect it to stay pretty close in this channel until the announcement is made. And then we should see some kind of impulsive move and maybe a setup. And if there is, we'll definitely check it out. Again, I don't trade futures. If there is a move on the S&P, a setup that's worth trading, I'll more than likely be taking it on the SPY. I like the SPY because it's massive volume and it's got a bunch of options available. But we can dial the SPY back down. Let's go to a 2-minute time frame. In fact, we'll go to a 1 minute. Let's go to a 1 minute time frame on the SPY so we can kind of track. We'll see it first in the futures, but then, you know, again, I'll be interested in trading it here on the SPY. And I like to trade it. If I do take a trade, I'm going to take it with options. And you can, you know, the volume and the depth of the market on the SPY is, you know, it's marvelous. And so you can day trade or short-term trade the SPY. Not all symbols, not all equities, ETFs have such a deep option market. So some of them can be a little more difficult to trade intraday or short-term, but the SPY is marvelous. Just marvelous. So I'll be looking for a short-term trade. I don't like the weeklies, and I don't want to be pushed out. So I'll actually, you know, if I can get into a trend and it's great, and I want to stay with it, I want to have time. So I'm gonna focus on using the September monthly. It's 51 days. Because I want to be out of a trade before the last 30 days. So if we get into a trend and it's going to last a few weeks, I want to have time to participate in it, and I don't want to be pushed out. And I do want to be out and not subject to time decay. So I'm gonna go, you know, in the money, and you know, if it goes down, I'm going to be looking at a put, right? And I want the ratio of the intrinsic value to the extrinsic value to be pretty high, right? So I want intrinsic value to be, you know, twice as big or more than the extrinsic. So intrinsic is how deep it is in the money, and then extrinsic is a combination of implied volatility and time, right? I don't really want to pay much for IB and time. So I like, this for the short side, I like this 307, 306, and it's got, delta up here. This one's probably better, delta 68. And it's, you can see the intrinsic is, over double the extrinsic value. So that would be a good, we'll see where price goes. But at this moment, those would be the contracts I would focus on. If we end up going to the long side, right, we're going to be looking somewhere, here at like the 292, maybe the 293 with similar deltas, high 60s into the 70s, and that ratio of intrinsic to extrinsic. So that would be the option contract I'd be interested in using if there's a trade setup. So the SPY is actually pulling back out of this channel just a little bit, isn't it? We've actually got what looks like a sloping channel. If you can see this kind of thing going on at the moment. But again, it'll probably break out of that when the news comes out. All right. Charles had said previously, sound is good, but the chart is bad. Is the chart I'm sharing now, is this pretty clear? Look good to everybody? And here's the S&P 500 futures. And it's kind of just sitting there. And we got about 8 minutes until the announcement. This is a good website, a good resource here. It's called Forex Factory. So they have a good news feed for news that affects Forex and the overall broad market. It's not so good for individual equities, but they're certainly tracking, the FOMC announcement. A couple good headlines here. With the Fed sure to cut rates, Powell is on the hook to flag next steps. So we'll see if this author is right. The Fed is sure to cut rates. They've certainly been signaling it. And here's an interesting article I was reading earlier. It said widely anticipated Fed rate cut might backfire for the bulls. And the whole thesis there is, the reason you're cutting rates is because economic conditions are deteriorating, right? You don't cut rates when the economy is strong and growing. You cut them when it looks like it needs some stimulus. And the current belief is that U.S. economy, global economy is facing some headwinds with the trade wars and various things, and it's going to need a little stimulus to keep growth going. We'll see, right? We will definitely see. Charles logged out and back in. Everything's good. Good. Okay. So we got, now kind of covered the preliminaries and the setup stuff faster than expected. So we got a few minutes to hang out here and wait. Let's see what the indexes are doing. I'm always curious. I track the Dow and the NASDAQ. I track a bunch of individual stocks. But let's see who's leading the Dow right now. It's Apple, up nearly 4%. Apple announced earnings, and I think they beat the forecasts on the top and bottom line. So they're up kind of nicely today. Coke had a big pop the last few days, and they're pulling back a little bit. That's interesting. Earlier, GE was having kind of a bad day. Where are they at now? Oh, they've recovered. So GE, I think, announced earnings, and of course, the earnings weren't good, but they gave a forecast that was sort of rosy. So GE's up a little bit. Let's look at the NASDAQ, see who the leaders and laggers are here on the NASDAQ. So on the NASDAQ, wow, Maxim, Wynn Hotels are down pretty sharp. X-Ray, Micron, Western Digital. What looks like tech is kind of dominating the downside. Broadcom, interesting. Starbucks. So who's leading the upside? Amgen, Electronic Arts, Apple. Well, some other tech. ADP, interesting. Tesla recovering after getting brutalized. Okay. Wow, so we just broke out of this channel on the SPY, and the news is not out yet. Interesting. So I'm going to go on mute, refill my coffee, and we're going to be ready here to see what happens in about 5 minutes. Hang tight. And welcome to the folks who've logged in. We got 132 people in the room here, so people are kind of flooding in, getting ready for the fireworks, right? If you just logged in, we did a poll earlier, and for the folks in the room, there was about 75% of the people said they thought there was going to be, 1 quarter point rate cut. That was the opinion in the room, and then market reaction, that was a little mixed. I think about 30% said they thought the market would go up, but 25% said it would go down. Others said maybe stay flat, and a few people said no idea, which is, it's a legitimate opinion for sure. All right, the clock is ticking down. Scott says he's looking at a quarter point rate cut. That sure is the consensus. We'll see if Mr. Powell does something surprising, eh? And Chris says 25-point cut, slight uptick in the market. All right, we're going to find out. See, we won't have to guess. One of my favorite quotes from Jeff Bezos, founder of Amazon. It's a quote from him supposedly early in Amazon's history. In a meeting, someone says, "Well, we think this, we think that." He goes, "We don't have to guess. We have the data." I love that. We don't have to guess. We have the data. In terms of trading, I think it's a bit of a trap to try and guess what new information will be, how the market will respond to it. Of course, we have opinions, and I have my own. But as traders, I think we're better off waiting and seeing how the market reacts and what kind of patterns and momentum build as a result of that. So we will not have to guess. We have about a minute and a half, and all will be revealed, right? So I'm going to be watching the chart here. If anybody else, if you're able, if you can grab the announcement, somebody pasted in there once the actual, brief announcement comes out, paste it into the chat area, that would be awesome. I'm going to try and get both the SPY and the futures here side by side. Let's see if we can do this cleanly. Oh, we did it. Okay. Get current price over here. Yeah, here it comes. You typically don't have to wait. James and the mafia says we don't have to guess, the fix is in. So we are certainly getting some volatility in both the SPY and the E-mini. Okay, there is the stroke of 2 o'clock Eastern. And I would say we have a dramatic move down so far. Yes. Would you call that dramatic? So Mark says they lowered it 25 basis points as expected, cut 25. Again, it's kind of a mixed, it's what everybody expects, but it's a signal that the economy is weakening and needs some stimulus. It's good news, bad news. Lower interest rates are for the most part good. And of course, Chris says it'll go back up after the market's hissy fit and not getting 50. So let's we're gonna let these price bars kind of paint. I got a different time frame here. This is 10-minute on the S&P. This is 1 minute on the ES. So let's on the SPY. Let's let this next price bar paint, and then let's see. My phone's blowing up with news alerts. Gunter says, looks like they're disappointed because they didn't get 50. Yeah, I think that's what Chris said. Brent says, sell the news. Not yet. Let's let it develop, huh? He wants to know what the rationale is. If you figure it out, let me know. Okay, we got that bar painted. Let's measure a retracement, okay? So here's the initial move down so far. If it goes deeper, we got to reset this. But we're going to wait for these bars to close before we declare a retracement or anything. So far, we got a pretty extreme move, and we're in a retracement. We're going to let these bars close. We're not going to jump too fast on it. But it is volatile, isn't it? And Nan pointed out it kind of held at 300, didn't it? So far. You're a true trading geek when sitting here watching price bars, is interesting. Okay, we're down through 300. We did have a retracement. We didn't really get any price bars to close, but it looks like it's continuing. Chris says he turned off his phone news alerts and restarted later. Oh, now we're getting a bit of a retracement. Let's see. I'm going to reset these bars for now. These retracement lines. Well, let's let this bar close and see what it does. That's a pretty strong retracement, isn't it? That's why you don't want to just, okay, that price bar closed. Let's measure this retracement. Now, it's in the retracement zone right now. We got one bar closed in there. The level that would disqualify this, it goes above 76.4. That's too big of a retracement. And so we'll draw a line there. This is simple, very simple Elliott wave rule. So look at that, we had that retracement. Let's look for evidence of a continuation of that original move. Could be seeing it happen pretty quick. Chuck says he bought a bunch of TLT iron condors at the open. And they haven't budged. So we got one, we had this big move down. We had, really one price bar up. It's starting to look like, let me shift this. We'll double up our price bars. Let me shift it to a 30-second. I think we'll get about the same pattern, but maybe a little faster signal. So big move down, good retracement. Still retracing, hasn't proven itself down yet. Turn the pyramids off for now. They're clouding the picture a little bit. So this retracement now is getting a little bit big. It hits it, if it gets above this red line, it's more than a retracement. It's a new trend. It's a nail biter, isn't it? Boom. Okay. So what this means is we had this initial move down. It was really a pretty good, strong move on the news. Let me draw my line. We had this big move down, and then we were looking for a retracement into this zone would be ideal. We needed to stay below that red line. It went up above it. Now it's pulling back. So this is a 76.4 Fibonacci retracement. So that tells you that it's bigger than a retracement. It could be a new trend forming. So the picture is a little mixed right now. And you can see I did not take that short based on that initial move, and there was never, even though it did retrace, there was never a low, lower, high, new low kind of setup. So I did not take that short, and that's turning out to be a really good thing. Now what do we do if we get a clear reversal here and it did go above the 76.4? That's going to be a conundrum. Brent says he played silver in anticipation that a rate cut would help. So far, not so much. See what it did to gold. So I've got the S&P 500 on a 10-minute chart over here. I've got gold on a 10-minute. You can see we got had, pretty much a parallel move down in gold and oil. James is saying gold and oil reflect dollar strength, but he's not sure why the dollar is stronger. Yeah, I saw your earlier comment there. Okay, well, right now we're not getting a clear pattern or setup on the S&P 500. So let's shift. Let's go back to a daily chart. Let's take a look at some trades that are interesting. I've got a few here that I like. We wanted to get through the announcement. And some of these we want to get through earnings. Here's one we were looking for a short. Let's see if it's still holding. The Dow component, TRV, Travelers Group, Travelers Companies. You can see after a big long run up, we're starting to get a pretty good low, lower high, beginning to form a new low. And you can see I use Ichimoku cloud, and it is starting to close below the cloud. And we've got a retracement zone defined here between these blue lines. We put a target at about 139, and that would be from current price of 147. We would put a stop here. That's about a 2-to-1 reward to risk ratio. So that's not a bad looking trade, TRV short. And Grayson pasted in a comment here. You guys can read it about what Powell said. That was from IBD. Yeah, waiting for Powell, which is about 18 minutes away. So let me show another interesting trade. So this is TRV. It's a Dow component. Here's one you probably never heard of. KWEB. It's a China ETF. It needs to break this thick line is the 200-day moving average. This lighter one, the gray line, is the 50. We got the Ichimoku cloud. We need to see a clear close, down below these lows, down below the Ichimoku cloud. And then there might be something going on here on this China ETF short. I really like a short on Haynes brand. They got earnings tomorrow, so we got to wait for their earnings. We're not going to take a trade right into earnings, but we might be shorting shorts company, right? We've got U.S. Steel and AKS. Oops. Reporting tomorrow, and these might be potential longs. So we got earnings on 8/1, but U.S. Steel could be a decent long if it breaks out of this channel to the upside. We would have a target or a stop down here, and our target, we're going to set it at this prior high. So there's got to be enough profit left after the earnings announcement. But that could be a good one. That could have some potential. So U.S. Steel long after earnings tomorrow, and then AKS is very similar. And the percent moves on those can be big. So they had their big move yesterday. We wanted to wait on this one through the rate decision, so we're going to do that. I'd be happy to take a few year symbols. Mitch has typed in one, shop. We'll take a look at that. I think we've looked at that in the trading room before. So we're looking on Shopify. It's had this big, marvelous uptrend. Looks like it's running out of steam, so our interest would be in a short. I wouldn't try and chase that up any higher, and you can see it is definitely hitting this double top, and we're definitely losing momentum. So I would be interested in a short. It would have to break this prior support level, and the question is, what would be the profit potential? You got a target down below 260. So depending on where your stop was, there might be something there. It's not totally exciting. Robert says Qualcomm. I think their earnings are either just passed or coming up very, very shortly. That's a tough chart. I mean, you do have this impulsive move or correction, trying to head up. It's going into this wedge. It looks like they probably have not announced yet, just by looking at the chart. So you just want to get through that. eBay for Vance. Is that the symbol, eBay? Yeah. Well, they're heading up, aren't they? It's a tough pattern. You had a big move down. You got nearly 100% retracement. Trying to chase that up, it just doesn't really conform to what I'm looking for, unfortunately. Tovia, GDX. You know, GDX can be good. You know, it's a gold miners ETF. It's had a nice run. And this actually is the new impulsive move right here. But it looks like it's beginning to set up into a potential correction right now. You know, put in this high, it's pulled back. It did find support at the cloud. You can see the momentum indicator is going to show it dropping off here. So a little tough to trade GDX at the moment. Bob XBI. This is the biotech spider ETF. You can see, you know, you had this big move down, you had a correction, tried to go down again, failed in that bullish, bearish move. Now it's consolidating pretty much into a wedge. It needs to break out of this one way or the other to be tradable. Jens is asking, which way does the dollar generally move on a rate cut? Yeah, I try not to get into the intermarket connections, because the reason I don't focus on it is it can just lead you to such a strong expectation of what you think should happen. And I just try to focus on the charts about what is happening, right? And we can, to a degree, predict, you know, what's going to happen next based on the patterns of what is happening. Right? And I showed that on, you know, on a couple, like go back to X. But I don't like trying to figure out what should happen based on, you know, the correlation between the dollar and the yield and, you know, the indexes and all that. They make you a little crazy, and it just develops such a strong expectation that it can tempt you to take trades that maybe the setups aren't there. That's my thinking. So, you know, when I say I think you can predict what's going to happen next based on price action, you know, U.S. Steel, you know, got decimated, right? Just moved down from over 46 bucks down to under 12. But now we have, you know, a move that's high and a higher low. So, you know, the down move is lower lows, lower highs, lower lows, lower highs, lower lows. Now we have a high, higher low, put in a new high. If it breaks out of this, that price action is telling you there's a shift in sentiment, and there's a probability you got an edge that this would continue up, right? You get long on something that, you know, low $16 range, and, you know, gosh, if it goes up to 18, 19 bucks, that's a huge percent gain. And if it goes clear through to 24, it's just a, you know, a home run. So those are the things I'm looking for, right? Those kind of things. Yeah, there we go. Anthony would like to look at Facebook, AMD. So Facebook, they just announced earnings, right? And, you know, there's so much hanging over Facebook's head, even if their earnings were good. And it's just not a great, you know, big move down, big move up, kind of pulling back. It's not a super tradable chart for me. AMD's had a, you know, a good run. They did have this impulsive move, a correction. They went on up into the price target zone. Looks like they must have announced, because they're getting crushed today, down 8.5%. And after this hitting this target zone, there typically is some kind of a complex correction. So not Not there. And Chuck says, glad I like X. You know, I'm waiting on X. I'm going to wait on US Steel till the earnings announcement tomorrow, and then we might initiate a position based on how it looks afterwards. All right. Two more. I'll take Virginia for Amazon, Mark for BIIB. I'm going to start winding it down here. You know, we did not get a tradable setup on the index. It's still bobbling, right? It had to move down. It's retraced. It's just sitting here in this range, probably waiting on the press conference, right? See what Mr. Powell has to say. So Amazon, this is a classic Elliott wave 5. So here's 3, big move up, perfect wave 4 correction. Now it's working its way up with high, higher, low, high, higher, low, high, pulling into a higher low. You want to make sure it looks like it's trying to reverse it to 50 and right in the middle of the cloud. If that reversal continues, there may be a good trade on up into this target zone, 2114 to 2600. Somewhere up in here is the target for Amazon. So that could be a good long. I would want to see this current reversal, you know, high, higher, low, looking for a new high. Just want to get that reversal to form up, and there might be a good trade there. And then the last one for Mark, BIIB. Yeah, it's tough. Biogen, you know, these biotechs, particularly smaller ones, can be really vulnerable to news. You can see this pretty devastating gap right here that happened. And here's this gap down from here to here. And now it's stuck in this channel. Now, sometimes these gaps will fill, but you're in this channel and it's kind of struggling. I'd wait for a clear break, and then maybe it would fill up, you know, 50% of the way. You know, those are tough. I think there's better setups than trying to trade these gaps. So it's not my kind of setup, but if you're really into it, that's something you could watch for. Okay, well, gonna go ahead and move on. I did want to let you know. You know, so we went through this, looked at some live charts. You know, scanning for trades, you know, it can be like finding a needle in a haystack. I pointed out some ones that I liked. I like TRV, QWEB, HBI, X or AKS long after their earnings, right? Yeah, I think these things, if you're going to be profitable in trading, you got to have great trade setups that give you a high probability outcome. You got to have good reward to risk ratio. You got to have a risk management strategy and a way to manage trades. So, you know, those trades I showed you, TRV, QWEB, HBI, X, AKS, anybody excited about those? Anybody think those have some potential? I know somebody said they were already jumping into X. What do you think? Anybody like some of those trades that I showed? Maybe go ahead and use that raise your hand button or type in a yes. There goes some hands. Okay, yes. Chu likes X. All right, good. Maybe you feel a little bit like this guy. You know, I went through those really, really fast, you know, threw out a bunch of information. Maybe you feel like, you know, wow, I'm drinking from a fire hose here. But if you're intrigued, I'll spend a few minutes going over a way you can follow along. You know, I set up front, I run a stock options advisory service in the trading room, right? So, you know, I'm going to offer a way for you to participate in this, you know, the great trade setups, risk management, trade management, up to 10 hours of detailed trade consultation, one-on-one in chat sessions in my trading room. You get a one-on-one consultation, you get ongoing education, you get access and help with all of this, right? And here's the offer. You try out my stock and option pick service for 30 days. It's a 30-day trial. It's $37, and there's a 100% money back guarantee on that. You know, come give it a try. Check out the service. Join the trading room if you like. It's optional, but it's a good experience, I think. And you know, if it's not a good fit, 100% money back guarantee. You know, but so it's a pretty low risk way to come check it out. I just posted the link in the chat box, and then it's on the screen here, right? So if you would like to check that out, come take a trial. And you know, what do you get with the service? You get a watch list of potential trades. So I shared some of those already. We've got a list that I put on a spreadsheet, and what we're watching for, I put it up on the website. You can check it out. You get alerts, right? Email, text message. We just added Telegram as a worldwide app, so you can get notified when I'm getting into a new trade. You get the exact details of the trade, the entry, the stop, the target. Most of the trades can be traded with the shares if you like that, or with option contracts. I share the option contract I like for each trade. And then you get alerts, email, text message, and then Telegram app when I make a change, move a stop, take profit, or close a trade. You get access to the live trading room. It's Monday through Thursday for an hour. There's a typo. It's an hour at the market open. You can attend if you like. You're not required, but a lot of people enjoy coming in, you know, seeing us look for trades, asking questions, analyzing trades, ideas like we did today. We do record it, and there's a short recap available, so you're welcome to attend, but it's not required. You'll still get the alerts on the trades. You get a weekly live chat session Wednesday nights. We got that tonight, 6 p.m. and 9 p.m. Eastern, where we walk through the current trades, take a look at potential trades, answer questions. You get when you sign up, you get a link to get on my calendar. We can have a one-on-one consultation. I provide some risk management and option trading tools and training. So when you sign up, you get access to that material and ongoing support and training. And there's more. You see that I use Ichimoku Cloud on my charts. There is a very specific method and settings that I use on Ichimoku Cloud. You can see it here. This isn't a great chart, is it? That big gap, but you can see it on Amazon, right? The Ichimoku Cloud is here. It looks different than you typically would see Ichimoku Cloud presented. I've got, again, a proprietary approach to using it and settings. And if you sign up for the trial, I'll include the Ichimoku Cloud course. That's it lists for 247 bucks. You sign up for the trial today, and I'll include that course. And again, here's that link to take the trial. And I know several folks on the line are existing customers. Some of them have been through the Ichimoku Cloud, the various training, and yeah, get good feedback on it. So that's the offer if you're interested. Hey, I appreciate you guys showing up today. And again, the S&P 500 indexes didn't really give us much of a trade setup, but we were ready. Looks like it's starting to head down, but it's still above that initial low. So I don't think we have a clear setup just yet. Let's go back to the SPY and back to that lower time frame and see. Take a peek at the 1 minute. Virginia says, hey, thank you, Virginia. Yeah, I'll continue doing this. I'm glad you enjoy it. And, you know, it'd be great to have you in the trading room if you're interested, Virginia. Take the trial, come sit with us. All right, so the SPY on a 1 minute, you know, had this big move down. We did have this big retracement. It is putting in lower lows, lower highs, lower lows. So it is kind of moving down. You probably want to wait till after Powell's press conference and then see what the setup looks like there. Yeah, we've had, you're right, Dale, we have had bigger moves in the past. This was clearly an impulsive move, but it wasn't huge percentage-wise. It wasn't big at all. You know, from 301 down to just under 300 is not a earth-shaking move, is it? Okay, well, hey, we're going to go ahead and wrap it up. I sure appreciate everybody being here. I hope you had a good experience and, you know, learned something. And, you know, we did throw out a couple good trade ideas there. So, and, you know, if you like that offer, definitely hope to see you in the trading room. You can be in the chat session tonight in a couple hours or in the trading room tomorrow morning. So I did record this. I will send it out. I'll send out the link again, and you can check that out. But, hey, trade safe. No matter what you do, use risk control. Keep your winners big, your losers small, and we will see you down the road. All right, take care. Thanks.